Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Hi, and welcome to StockInvest.us podcast for week 48. My name is Jim, and I would like to start this podcast by apologizing for the very bad sound quality in the last week's podcast. For 97 Mondays in a row before markets open, I've been giving you this podcast where I tell you a little bit about what I think will happen in the week ahead of us, how the markets will move, giving you some major analysis of the big companies, telling you a little bit about crypto, of course letting you into my portfolio, and lately giving you some stock tips for the week. During all these 97 podcasts, I've not been able to be at the same place. And last Monday, I was on a small island outside Norway and had to do the podcast on a handheld device. So that was the reason for the very bad sound quality. Last week, I told you I believed that the market would be red. That was my feeling, not by very much, but Nasdaq was down by 3%. How will it be this week? What are the gold prices? What are the oil prices? What are the things that we should look out for in this week, this trading week ahead of us? Well, I will let you know. We will, as usual, start with the markets. Last week was yet another red week for the markets, and it was especially Friday, the end of the week, as we expected, that the market took a huge fall. The reason was, of course, the new COVID variant pushing the markets down. Nasdaq ending at 15,492, or down 3.52%. As I told you in last week's podcast, I thought that the market could go as low as 15,600, so 15,492 even surprised me a bit. But that's the thing with the major news, and when markets are very volatile, something can trigger huge falls, and Friday was one of these days, which I believe we will see much more of. That was the reason why I told you just listen to my podcast from week 13 in 2020, where I speak about greed and fear, because I believe, as I said in the intro, we are at that stage now where markets will be much more volatile and single news can push it either hugely up or hugely down. Dow Jones ending the week down exactly 2% at 34,899 points. And the big companies fell. Also kind of expected. So what can we expect for this week? What are the things that can drive the market this week? Well, we know that on Thursday new job numbers will come out, but I don't think they will surprise the market much. The job market is a little bit tight, but work participant is very low. Some of the reason why the numbers are low. A lot of people simply do not want to work. Compared to previous years, has to do a little bit with COVID, etc. These numbers will be tight, I guess, but nothing very surprising coming on Thursday, so you can keep an attention to that. Of course, if they are very negative, they can affect market hugely, but I don't think so. What else during the week? There will be a few other numbers coming out, but all of them will just confirm what I already said in so many podcasts, that it's almost getting boring. The inflation is here to stay, and more people across the board is just saying the same thing. Tight job numbers will, of course, increase salaries. Salaries will increase the price of goods, etc. So this is just to continue. Gas prices, oil prices, energy prices in general is very high. And last week Biden released oil reserves, and this pushed oil down to $71, down $5 for the week, or 7%. So what you can expect, but knowing the huge consumption of the oil and the time of the year, I believe oil will still continue upwards. I still keep that one target to hit 100 before New Year. It's only 30 days left, so we'll see if I being correct in this. Time is not on my side right now, but the huge conflict can give just that. Eventually oil should start to decline a little bit, but I think it will have a swing up during this week. Should see it back to 75, maybe even higher. Gold at 1,800 was also down $47 last week, 2.61% to be exact. And gold did follow the market a little bit, was a little up last week, and then fell on the end of the week. But the target for gold at 2,000 by end of year is still there. I still think gold will push up, as I think market will be more at the 10-year Treasury Yield that measure the inflation and the expectation of inflation is at 148. Actually fell a little bit last week. So you can wonder, when will these things start to hit? Well, if you read news across the world, you can read more and more stories about people getting less buying power due to the increased prices on anything from sugar to regular goods. And this will sooner or later affect the sales. So sales numbers coming up is also something that you want to keep an eye on. The bigger picture is, of course, this major news last week was the new COVID variant. And several countries decided to shut the borders. We still don't know how this will play out. We know that the big biotech companies, of course, support anything that boosts their sales. So that's an early stock tips for this week. Of course, Pfizer and Moderna should, at least for the beginning of the week, have a very nice start until we see how it plays out. But if you listen to what they're saying in Africa, where everything started, is of course that this variant is much milder than the previous Delta variant is less scary. So why do they close the borders? Still don't know. Will they just reopen, or will we get into a scenario where they start shutting down everything again, preparing for the booster shot number 5, 6, 7, 8? Who knows? Just tells me that again, playing these big biotech companies is maybe where you should be, and knowing that half of the US Congress is buying into these stocks, well, maybe where you want to be. Anyway, that could play out in the first part of the week, but there is another thing that is a little bit more interesting, and it's something which I have mentioned in previous podcast. Taiwan and Ukraine. There is more news about Ukraine. We know that the Russians have a huge force on the borders of Ukraine, and even NATO is now talking that they expect a possible invasion of Ukraine. Of course, this is politics. It's a lot of talks back and forth, but it might very well happen. And we also know that China have done more things in Taiwan. So it might be that these two conflicts suddenly pop up on the radar, and that will for sure push the markets down. These are news which you should follow in general, and trying to get to some conclusion. Where are we heading this week? So as I said, the COVID play, it's a milder version, so I don't understand why that should have such a huge effect on the market. We know that the job numbers are coming on Thursday. That's kind of late in the week, but I don't expect them to be very much. But this conflict with Taiwan and Ukraine can pop up any given day, so keep an eye on it. Read the news. Try to be ahead of things, because if these things escalate, I can promise you one thing: there will be huge falls in the markets. That will give you a super buying opportunity if you are in cash. If you are in the market, of course, you will have to take some losses. Another thing that we can do, these are the fundamental things. Another thing that we can do is look at buy and sell signals across the board. We analyze more than 32,000 tickers at StockInvest.us, and right now, only 40% of all these tickers are giving buy signals. I haven't seen this low for ages. And this gives the odd thing, because either this can be a super buying opportunity, or you can have the same thing. What happens when the markets are overbought, that they just continue to be overbought. We know that it's very easy to go both ways when things are either too high or too low. So we know, giving only 14% buy signals, that the markets are scared. They are very scared. We know that that will trigger some volatility, so I expect a volatile week, some up and down. For instance, the market could start very green in the first few minutes today, then just dump straight to the red. That's a highly likely scenario. or it could just go very well all week. Nasdaq, only 13% buy signals. We are getting close to a very short-term buying opportunities. Could be for just a few days. Will it be today, tomorrow? I don't know. Or will this just get into a frantic sell-off? We are at that limit where both things can happen. And usually I would advise people to be more rapid in their trades. It's a kind of situation where you maybe do not want to sit overnight. You do an intraday trade. You get in the morning, out in the evening, etc. That you do not want to sit next day as markets get more volatile. New York Stock Exchange, 17% buy signals. London, only 11% buy signals. Frankfurt, a little bit higher, 19%. And in China, it's the opposite thing. There is 40% buy signals. But to get a real clear picture, I would advise you, as usual, just go and look at the chart, because that is giving you that visual ID about. Last week I told you it was above, it was in the top of the trend. Normally you would have a reaction down. You will have it for sure to the middle of the trend, but it can bounce up. And if you look at the chart, you will see exactly that happened. Of course, the markets had a top at 16,057 points for Nasdaq, falling then down, is now traded at 15,000, just under 15,500. Has support where it is right now, then at 15,400, 15,200. So there is a highly likely chance that the markets will turn somewhere close now and push up. But then there will be huge resistance at 15,800. So that is also something to take in consideration, because it means that that will be the trading interval. Between 15,200, 15,800 will be the most likely trading range, because when and if Nasdaq turns up again, it should struggle a little bit around 15,800, 16,000. If breaking above 16,000, you can just expect it to continue upwards. Relative strength index is getting very low. It's not oversold yet. Last time it was oversold was back in beginning of October, when it was 14,225, and from that point just went straight up almost 2,000 points. We are not there yet, but we are getting close to oversold. But as I told you, in these very last parts, things can fall much faster. There is a sell signal from the short-term moving average. There is a buy signal from the long-term moving average. But if markets are falling today or tomorrow, there will also be a sell signal from the long-term moving average. So in general, we can see that the markets are a little bit scary. So what is it for this week ahead of us? Well, as I told you, there is some support today. There is some support at 15,400 and a bit more at 15,200. On the upside, it's 15,800 is a lot of resistance. So given what we usually see, we can expect a sideways movement this week, somewhere between 15,200 and 15,900. It's quite huge gap. I know. How will it play out? My guess is that we can have a slight reaction up for the beginning of the day. That's my total guess, that we'll have a great opening, but at the end of the day, we will see that negative thing pushing markets further down. So that the first part of the week, first few days of the week might be red. It might then just bounce a little bit up again. I'm really not sure if it will be a red or a green week this week. Something tells me that we should end somewhere close to where we are today. Another part of me say that we will have a total red week where we end somewhere around 15,200. So I would conclude with the following. I expect the markets to move during this week. I expect the markets to move very low, could be as low as 14,800 if we get a very scary scenario. That will be the extreme low. Most likely the movements will be between, as I said earlier, 15,200, 15,900. That will be where it is. ending the week somewhere around 15,400. So let's say a neutral to slightly red week. But again, as I said about fundamentals, there are things brewing and these things can cause a real crash. Right now, we should have that slight bounce up. If we get that slight bounce up and things then go back, we could say that we have a head and shoulder formation indicating that we should get down to 14,800 pretty soon. But I don't think it will be this week. I will stick to an ending somewhere around 15,400, 15,500 points by the end of the week, so more or less neutral. Before we head into the stock analysis and the trading tips, how can you play on these things? Well, knowing that I expect markets to be volatile. Again, we know a lot of companies fell on Friday. Quite vastly. So you can of course try to do some intraday trades. And in general, since expecting volatility, I'll just repeat that. Maybe you should not sit over several days, but play it when markets are very red. You get in, buy on red, as I always say, sell on green. Use that volatility, try to get some 2 to 5%. That's a very good gain. Should there be other things? Well, I expect that the major companies might go more sideways. Nothing special, could even fall a little bit. But some of these stocks, because over the last few weeks, we have seen that the major stocks, which are represented on the index, is going up, while a lot of other stocks are falling. That's the reason why there are so many sell signals. So there should be several stock picks into these kind of companies. What you can use, you can go to our webpage, StockInvest.us, go to trading IDs, you will find it on the top of the page. There you will find several lists. You will find oversold's relative strength index you can use, find tickers which is oversold. Try to find liquid stocks because that reduces your risks. Pivot bottoms is another one, and well, there is several kind of lists you can use. They will list you the companies and you can see if you find these companies which have fallen a lot lately, have little resistance above and can do what we call a bounce up, because there should be several bounce up opportunities. I don't think it will be in the major companies. I think it will be among some of the smaller companies, could even be many of these penny stocks doing good this week, and it could be a week where a lot of these penny biotech stocks do some nice gains. Could be. You have to watch out. And small tip there, just out of the blue, have a look at Airlocks. I think that might one be up for trade. Huge risk. You should only play with your risk capital. Be prepared for high volatility. So that's the market, sideways, slightly red, and we will get into some of the major stocks. We'll do an analysis of Apple, Tesla, Microsoft, and of course Bitcoin, DogeCoin. I will give you the trading tips of the week, and we will at the very end do the portfolio. First off coming is of course the major stocks. Last week I was negative to the major stocks while being positive to crypto. But the fact is that crypto didn't do very well at all, but we will get to that. First, we'll start with Apple. And last week I told you I believe Apple would fall down to 153, ending at 156.81. So I was closer this time than I've been for the last 2 weeks, where I've been a bit off target. So what is it with Apple today? What can we expect? Well, Apple took the fall as expected, but it was mainly Friday. Before Friday, it was moving quite nicely, pushing higher and higher, then took a huge fall. If you look at the chart, again, as in the markets, I suggest to do that. Just go to StockInvest.us, type in the ticker Apple or write Apple, get the chart, and you can see what I mean. It's falling down from the top of the trend, just as you can expect. It was very overbought on the relative strength index. I told you this is very seldom to see this high relative strength index, and usually that indicates further fall. On the last fall, the volume was going a little bit up. It's a divergence in volume. We don't like that. We want volume to follow the price. indicates actually that we can expect further fall in Apple. It could be that it will take a slight little twist in the opening today, or even for the first few parts of this week, trading days of this week, where it bounces a little up, could go up to 160, but that 160 will face a lot of resistance, and I think that it will go down from there. If it goes that up, it should go down. Most likely scenario, in my opinion, is that it will start the trading day today somewhere around 158, 159, then just continue down during the day, and it will for sure fall all the way to 152, maybe 150. But there will be lots and lots of support, so that might be a good pickup level. That will be somewhere also in the middle of the trend, and as I tried to tell you before, when things get to the top of the trend, you would expect it to fall either to the middle or the bottom of the trend. If to break trend up, you want it to go in the middle of the trend and then push up to have that momentum to push to a new high. The middle of the trend will be around $152, $154, so that will coincide with the support levels, of course, which it's due. And I think that that might be the case. Hard to say. But I think for the week ahead of us, be prepared that we get Apple down to $150 low. Could even be 148 on a very, very red day. But in general, around 150. The very high I see Apple is 160. So I expect it to be a red week for Apple. My guess is it will could start trading a little bit up, then fall down for the rest of the week, and that the low should be either Thursday or Friday, not easy to say. I have had low targets for Apple for some weeks now. I had 146, 145 been my target for several weeks. And even though I say 100 and I think 150 will be low, I think I will keep a low target for this week. I will actually reinstate my previous opinion that we will see Apple down to 146. So I'm betting that it will go a little bit worse than I actually think it will go. What you can pull out of it is the following. Looking at the chart, it's in a slightly rising trend, doing a natural correction. And I will repeat this 2 times. Natural correction. You can expect this from things when they are in the upper trend. And that is why, and let this be the lesson of this podcast, please check out the charts. Seeing things visual will make much more sense. And you will start to understand not only the things I say, but also other people say. Trends are very strong. Let the trend be your friend. Apple is still within a rising trend, so there is talking long time forward. Of course, it's still within the rising trend, so it's not about being too negative about Apple. It's just that it's in the upper part of the trend, and normally you have a correction down. If you go to our webpage, we will addition give you the accumulated volume, how many shares were bought and sold at the different levels. You will find that as gray bars on the right hand side. And these things will tell you a little bit about support and resistance levels. And you can read all across the internet, just Google resistance, support, resistance stocks. And you will find very nice information, or just go to our webpage, or even go to our YouTube channel, and you will find videos where we talk a little bit about support and the resistance levels. Get this into a part of your trading strategy. So a red week expected for Apple. I have that feeling that since markets will be volatile, it can react a bit more than I believe. So I want to signal that I'm a little bit negative for Apple in general, also for the week ahead. So I'll keep a target for $146 for Apple, and hopefully I will be wrong, that of course it will be up instead of down. Microsoft, I expected Microsoft to fall last week, and of course it fell last week. My target was 320, did better than that, ending at 329, so it was $10 above my target. Microsoft been doing very well for a very long time. Looking at the chart, we can say the following. It's in the top of the trend, reacting down as it should. It's looking more or less the same as Apple, but there is one huge difference, and I think I mentioned that in the last podcast as well. There is less resistance in Microsoft. There is a higher chance for a higher fall. And with no resistance before $322, I'm dead certain it will fall to 322. After 322, no support before 310, and that is the bottom of the trend. I think it's a huge likelihood that we will see Microsoft fall to $310. Is almost willing to bet. Of course, it can pick up at 322, just continue upwards. It's a very nice rising trend. So let the trend be your friend. You know that a few weeks, maybe a month ahead, it should be higher than it is today. But for this week, it's the highest chance for a fall. I think $310 will be the very low for Microsoft this week. And I think it will be by the end of the week. So I will actually reduce my target also for Microsoft was 320 last week. Before that, I had 312 for several weeks. I will get back to the 312 prediction for Microsoft. By end of the week, it will be back at 312. Hopefully, again, I will be wrong, that it will just continue upward. We will see. And I tell you, let the trend be your friend. So what happens if the stock breaks the trend? Sometimes it will break trend. And what you want is when it's breaking the trend, you want to see a volume change. You want to see increase in volume to see if it's sustainable. To get Microsoft to break up to an even faster rising trend, that's not very likely. At the same time, it's very likely that it will stick within that very nice rising trend, indicating that it should be $400 in just 3-4 months ahead. When it gets down to the bottom of the trend, because that's what I think will happen, I think it will even happen this week. We will see if I will be correct. What you want to follow is when it breaks, and if it breaks down, will it do it on rising volume? Because if it falls below on rising volume, that's an indicator that it might continue further down, and that you can get a trend change. That will usually be from rising to less rising. It's very seldom that the stock goes from a rising to a falling trend. It usually goes in some steps. So even if it breaks the trend, doesn't mean that the fun is over in Microsoft. Just means that you can expect less speed, less rising rate speed. Relative strength index is being 41. It's not oversold by any means. Still can fall further down. It has been down at 26, 34, 22 back in September, and I think that we will see it back at somewhere around these levels before it turns. That will also add to the reasoning why I think that we will see it down to $310. So I expect a red week for Microsoft. Sell signals from the short-term moving average, buy signals from the long-term moving average. But if 322 is broken down, you will see a sell signal also from the long-term moving average. And then it is Tesla. And Tesla is much harder to predict. And for those who follow me, you know my Tesla story. If you're new, I'll just recap it very quickly. I bought Tesla 560. I told you ever since this will just continue upwards. I expected minimum $800-900 to go to $800. It went up to 8,900. At 8,900, I put my trailing stop loss on and just let it run. Because as I said, you never know where it goes. But I was more than happy about 900, thinking that it would correct somewhere there. Tesla didn't do that. It went straight up to $1,229. I was all the way up to the very high. And when it started to fall, my trailing stop loss went out. So I'm out of Tesla. And as I said, even when it was 1,000, I think that Tesla will correct downwards. Right now, relative strength index is 37. Still can get lower. Tesla doesn't have a recent history of having low relative strength index. It's usually working in the upper part of the relative strength index. It's a very popular stock. And when it goes, it usually goes very well for very long time, long periods at a time. Very nice rising trend. You can check yourself. Go to our webpage, StockInvest.us, type in the ticker Tesla, TSLA, or write Tesla, and you will get the chart. At the very bottom of the trend now, it's a huge chance that it will just continue upwards. Volume is following Tesla very nice. We would like to see that. So that's a good sign. Sell signals from the short-term moving average, but still buy signal from the long-term moving average. There's a fair chance that it might turn upwards now. We know that Elon Musk sold lots of shares. Didn't affect the stock very much. It was picked up by the market. So there is obviously a lot of nice momentum in the stock. But there are signs that it is slowing down. So what will happen for the week ahead of us? As you know, I have a target of 880. I think Tesla will be at any time soon at 880. But a very, very strong support at $1,000 indicate that if you get to 1,000, it could be a huge buying opportunity in Tesla. If it breaks below 1,000, it should fall very fast to 900. And that's why my target is 888. We will see that huge fall. So it's a gamble, a hard speculation. The chart is starting to get close to neutral, even over algorithms, which are not biased, not like me. They don't have any prejudice. They are just biased, are getting very close to neutral. They don't know how these things will go. The score is 149 right now. If it goes below 1, it will turn neutral. I think we will see that very soon. At the same time, the system thinks that it's a fair chance that it might turn where it is and continue upwards. And that is a high likelihood. I just have to give my opinion. What do I think? Where do I think Tesla will be by the end of the week? And I think that I just said for Apple and Microsoft that we might have a very good start of the week, but then it should get redder. I think this will affect Tesla as well and push Tesla down. I don't think there is a huge chance we will see Tesla at 880 by the end of the week, given the strong support at 1,000. But I will keep Tesla at 880 simply because I believe we soon will have Tesla down there, and that soon could be this week if things political or COVID or anything get worse will happen. And that will just recap these three big stock analysis, because I expect markets to be volatile. Volatile just means that I expect markets to move much during a day. It could be down 1% at one time and just a few hours later up 2% plus, moving 3% during a day. I think we are in that scenario. Listen to the podcast from week 30, my very, very first podcast in this series about greed and fear, and you will get a deeper meaning of what I mean. I think we are there right now. So that is why I keep these targets, because there is, despite the charts, everything looking somewhat okay, there is this huge chance that we have that very, very high volatility. And when it happens, things either get too optimistic or too pessimistic. And my gamble is that we can have that too pessimistic part that will bring the stocks down to the current levels, which I said, Tesla at 880. But let's not dwell there much longer. Time is moving. We will get to Bitcoin. Bitcoin, last week I told you that I believe Bitcoin will go to 65,000. But it was struggling, ending the Friday on 55,000. Right now it's up at 57, I think, if I'm not mistaken. Resistance at 60. If you look at the chart, Bitcoin fell to the bottom of the trend, is now going upwards to the upper part of the trend. So it's moving somewhat what can be expected. From this point up, the chances that it will go up is higher than it will go down. Buy signal just released from the short-term moving average, but still sell signal from the long-term moving average. Some resistance at $60,000. That will be a struggling point. If it breaks above 62, 63,000, it should move much faster. And right now, everything is indicating that Bitcoin will go up towards the top of the trend, which is 75,000. Doesn't mean it will do it this week, but that we are on an up run again. I was positive last week. I will remain positive because everything I see in this chart is telling me the same thing, that we should continue upwards. A bit slower than expected. I thought there was a tiny chance that 60,000 would hold and bounce up for 60,000, but as I told you, between 60 and 55,000 hardly any support. Same thing between 55 and 50. That is why below 55 you could expect a fall to 50. It's the kind of way it is, and it was, I don't remember if it was Saturday or Sunday, the crypto fell pretty hard but picked up over the last few days. So target for the week will be $65,000, which is the exact same I had last week. So I remain positive to Bitcoin, think it will go up. DogeCoin is, we follow DogeCoin as well, and that went down to 20 cents. Was back at 20 cents in mid of September. From that point went up to 30, gave a huge buying opportunity. I will just repeat myself, it's oversold on the relative strength index, and I think right now it's a huge buying opportunity in DogeCoin that you can expect good gains if you buy this, let's call them what it is, shitcoins. If you buy them, you can have a fun ride up, should at least go to 26 cents. I believe it will go up to 30 and eventually more. Lately, from being very nice forecast for Dogecoin, that fall down to 20 was not what you wanted. You wanted it to turn somewhere around 22, 24 to keep that rising trend. Now it's indicating a slightly falling trend, indicating a tougher period ahead of Dogecoin where you cannot expect much. But if it goes from 20 to 30, well, that's 50%. And that was the trade which I did last time with very good reward, of course. And what did I do now when it was 20 cents? Well, I bought Dogecoin because I simply believe it will continue upwards. I have some Bitcoin. As I told you, I bought Bitcoin at 30,000, saying that this will just continue upwards, and I don't see any reason why Bitcoin shouldn't hit 100,000. It's moving upwards. Everything is indicating that it should continue. So I remain very positive. Bitcoin reduced my target a little bit for Dogecoin for this week. I think that it will head up towards 26 cents. But as I just told you, I bought Bitcoin at 20 because this should, in my opinion, be just a very, very easy buying opportunity where you at least should expect, in my opinion, 30% profit. We will see by the end of the week if we are correct. Remember that when buying crypto, you pay huge fees. So you need at least, in my opinion, 10% swing. In this case, if you're able to get in now, it's around 21 cents. So you will need it about 23 cents to make really any profit. And I think that it will be 26, will be an easy lift for Dogecoin. So there should be potential. For the end of the week, let's be a little optimistic, keep 26 as target. And that was the analysis for the very last part of the portfolio. For a few last minutes, we will get to the trading tips. And last week, I got into Zoom. How did that go? And what about again, that super high risk trade, which we went into 45? How will it be? Are we still on a winning strike or are we heading into red territory? You will know. Just listen for that very last part where we have the trading tips and the portfolio. With markets falling last week, it was also hard for the trading tips. And last week I told you that I would buy Zoom. That would be the trading tip of the week. I think Zoom is Zoomedica is very low, and that is a buying opportunity. I was able to get in at 42 cents straight. The week was very boring, ending at 42.6 cents. So actually it was up 1.43%. That trade is still active. I think there is gains to be made in Zoomedica. And I think that there is a huge chance that I might sell it during this week. We will see. But as I said in the very beginning of this podcast later, that I think this week might be a week where we see some of these smaller companies doing well. They've been red for weeks and weeks, and I think that as people take out liquidity from that huge stocks like Apple, Microsoft, etc., I think that we'll see some risk money flow into these smaller stocks, giving room, for instance, for Zumerica to move upwards at least to the 50-cent level. Hopefully that will happen. Hopefully that will give us 5 to 8%. I think there is more to be done in Zumerica. We will know by this week. So we keep Zumerica open. It was not sold. But 3 weeks ago I bought UAB, and I bought it at 9.40. I told you this will be super speculative trade. You need an extreme huge stop loss because it will be very volatile. And right now, UAB is traded at 6.45. I have my position open. I'm down 31.38%. It's the hugest loss I had in any of these trading tips so far. You may wonder why haven't I closed it. I told you UAB is super volatile. Looking in perspective, I should have closed it around 10-15% loss. I still keep it open. All other companies have had trailing stop loss, and as you know, for all of these trading tips, the average loss is 3.4%, simply because that stop loss kicks in. I keep UAB open, and I might regret it, but everything in me, I've watched this stock many times, tells me that it should bounce up. And I even had UAB in my portfolio, which we are following, which we'll get to the very end of this podcast, will be about my high-risk portfolio. UAB was in somewhat the same scenario. I bought it back then at 8.72, fell down to 6. I think it was even as low as 5. And then had a rush upwards and was closed at $17, giving me 96% profit. So I can handle a little risk in UAB, but this, just to warn you, this might be brutal. We don't know yet, but on any green day we should see UAB push upwards. Of course, when it gets back to 9, around 9, if it gets back to 9, I have to consider, should I just take a minor loss or stay with it. Right now I'm sticking with UAB. I'm surprised even myself to see this huge loss, but I didn't put a trailing stop loss to UAB, and now I'm paying the price, minus 31% for the UAB trade so far. We will see, am I right or am I wrong about UAB? It's the only one in all these trading tips that is being kept open with such a loss. 2 weeks ago in week 46, I bought Excel at 18, Alexis at 18.11 dollars, and haven't really moved. Last week was very hard. I told you that it would be a hard week where I didn't expect Excel to move very much, ending the week at 17.06. It is down 5.8%. My stop loss is very close. It will be interesting to see if it will be cut today. It was so close last week to be cut, so we will see. Coming about how do I put my stop losses? Well, I use a volatility indicator. I see what is the average volatility for the stock. That will give me an idea how much it swings up and down during a day, because you don't want your trade to be cut short by a natural swing. Excel had higher volatility, so that's the reason why it's still there, but now it's getting really close to being cut. And about these volatility things, you can use several indicators to check what kind of range you should set. Some use just 5% flat, some use 8% flat, some use intraday volatility. The overall risk calculated for Excel is high in our opinion. We will see how Excel will do. And since I then have 3 open trades, I have UAB, Excel, Zumerica, and I have them open. I think everyone right now is still a buying opportunity, so these will be the trading tips for the week. I think you can buy Ukugem, Excel or Sumerica, and there should be a fair chance for you to make money. I will not add any more. 3 is more than enough in the market situation that we are right now, so I will not add any new trading tips for the week. We just keep these open. There should be, as I said, money to be made, but also be aware that these are what I like to consider high-risk stocks. So don't be surprised if they move much. We will see. Ukugem, Excel, Sumerica, these are the trades that I kept open. Previously, we had a huge winning strike. Will we maybe able to continue that winning strike? I don't know. We have 9 profit trades. 5 losses so far in all the things that we've done in these trading tips. Profit is still nice. Ukugem might be the one that will tip it closer to 0 trade. But market's been red for a few weeks, so don't expect too much. Ukugem, Excel, Sumerica, these are the trades recommended for this week. Be prepared for high volatility. It's the name of the game. For the very last part of this podcast is, of course, the high-risk portfolio, which we've been following to Christmas. As I say, I'm shutting it slightly down. I have, over all these weeks, reduced my investments into the stock markets because I think we are at the end of the rally. For you who follow me, when back in week 13, when it was greed and fear, so long ago, 97 podcasts ago, I put more or less everything I had into the stock market because I told you that's the buying opportunity of all times. And since then, slowly you heard me saying that I've reduced my percentage of investments into the stock market. And I'm doing that. When I sell things, I have several portfolios. The one we follow here is my high-risk portfolio. And it's, of course, the one taking the hit when markets are like they are now. My oil portfolio has been doing very well, and the less risk portfolio has been doing very well, where you have Apple, Microsoft, and all these big companies been doing very well. But this high risk portfolio been struggling for the last weeks. And I don't buy any new. I will slowly close this portfolio entirely. Right now, it's not many companies left. Will I be able to get out of them before Christmas? We will see. Diffusion Pharmaceuticals, this company, which I've been trading so much. I started actually week 13 with this company and had so much gains, been in and out, accumulating stocks. Super rally, but since the very last trade has not been very, very good, to see it mildly. But all that previous good trades, of course, make it still huge profit in Diffusion Pharmaceuticals. I still think they have the right product, but a super bad management. Right now, trading at 39 cents, was up a little bit last week. And I think they are very low compared to what they do. They still have lots of money in the bank. The timing is still very good. But right now, I don't see anything huge coming from Diffusion. But it's one of these companies that suddenly they push the right news, market takes it off, brings it up by 50 or 100% in a single day. We will see. NEO, which we kept in the portfolio for a very long time, was also up last week, ending at 39.99. So NEO was a good week. And I think there is more to be gained from NEO. But we bought NEO at 48.74, so it's a loss of 17% for NEO. NEO is the right place to be along with all this other green technology. I was hoping that since we are where we are at the very end of November, heading into December, that NEO at this point would be up at 50.60. Didn't happen. NEO was struggling in the huge market, didn't follow even Tesla. When Tesla was going pretty fast for 500, NEO stayed stuck just under 40. Will it suddenly have this huge movement forward before markets fall? Hard to say. Could be that we even have to cut NEO with a loss. We will see. Petrogeo Service 346, slightly down last week. Nothing special there. Arbutus 313 was also a little bit down week. In overall, the portfolio last week ending down minus 0.52%. So it was almost unchanged last week. It was Diffusion, NEO, and pulling things up while the other were pulling a little bit down. Nothing special in that high risk portfolio. We will just follow it to the very end. See if we can get out. You might wonder, if you're a new listener, so how did this portfolio do? Well, quick recap there. We sold Autos, 94% profit. We sold XBEV, 7% profit. We sold Sumerica with 63% profit. We sold Ur Energy with 95% profit. We sold Ukuggen with 96% profit. So yes, there was some hefty trades in this portfolio, but we are right now in those last few. I think there are more to be squeezed out of these last few. Hopefully I will be correct. But if I close the portfolio today, it will still be with more than 50% gain. So it's been a good portfolio to follow so far. We will see. That was it. Quick recap as well. For the trading tips for this week, I think there is money to be made in Ukuggen, Excel, Sumerica. Either one of all of this, we will see how it will play out for the week. I think some of these stocks will do better. In general, I think that the major stocks will continue to fall a little bit. There is a good chance that we can have some geopolitical issues coming up. Follow it. The market can go both ways this week. I believe it will be a red week. We will see. But it's also a week where it can be very green. You never know about these things. For sure, one thing is for sure, it will be a volatile week. That will be the end of the podcast. That tip to you. If you don't understand what volatility is, it's just how much things move up and down. Dig deeper is one of these things that you really want to learn. Dig deeper, Google it, watch a few videos about it. It's very nice to know. Very good thing, especially if you are into shorter trading. Doesn't matter that much if you are a long-term trader, but especially if you're trying to make money on daily swing trades or even weekly swing trades. Try to know, understand volatility, because these things give an idea also about when should you buy during the day. Stock may move very much during the day. Very often they have the same kind of pattern, either open too strong, fall to the middle of the day, or they fall by the end of the day. Watch your stock. What is the classic pattern of your stock? That volatility can give you, at least understanding the concept of volatility, at least, in my opinion, give you a trading benefit of 3 to 4%, because that's usually what I see. You will be able to cut a much better buying point, because you want to buy as low as possible and you want to sell as high as possible. So trying to understand these movements, the daily volatility, will give an idea how the stock moves during a day, even a week. And that will give you an idea about the possible good selling and possible good buying level. I hope you enjoyed this podcast. I hope you will follow me. I hope, by all means, you had a very, very nice week last week. Thanksgiving for you American listeners. Hope you spent some time with your family. I even hope that you will do this week as well. Don't sit too much in front of the computer. Be a little bit relaxed about the markets. Read about details, understand the companies which you are investing into. We are at StockInvest.us trying to help you with this. We release on our news or YouTube channel, we release about videos where you can learn more about the general stock to help you understand the stock you're trading. We give a lot of other things, so check out our YouTube channel. Even this podcast will be available on YouTube just a few hours after it's released, when our brilliant Alexandra will produce the podcast for YouTube. It will be available, and there you will even be able to get subtext. I am Norwegian. I'm not English or American at all. I'm Norwegian, so sometimes my accent might be truly hard to understand. Have a nice trading week, and we will speak in just a week. Bye.